Mark, I wonder what you think accounts for some of the weakness in the space and how specific this news is regarding Facebook in Germany, if that's the seed of all of this today.
Well, I think the biggest regulatory overhang on the biggest overhang on the sector has been regulation for the last, call it 12 months. I think that was one of the reasons why the FANG stock sort of hit a ceiling, that and near-term valuation in the middle of last year. So that keeps bubbling up. Our guess is, our sense is that we're going to start seeing that dissipate as an issue in terms of whether it impacts fundamentals. We've now got two and a half full quarters of Facebook and Google results since the imposition of GDPR, the biggest privacy regulation we're probably going to see for the next several years, that didn't seem to have had any material impact. So we think fundamentals are intact. The order of stocks that we like here, we continue to like Facebook first. We still think there's a re-rating story here. Continue to like Google, though there are issues with operating expenses. And then Netflix would be third amongst the FANGs.
And Mark, if I recall correctly, your top large cap picks for this year were Facebook, which is up 28% year to date already, Netflix up 31%, Google and Booking. Given what you've seen so far, are things largely playing out as you expected?
Estimates haven't really changed that much for these stocks, so it's really been kind of a re-rating issue. These stocks sold off, and they sold off aggressively in December. That created interesting entry points. Now, Facebook happened to sell off for not just 1 month, but for 6 months. So, and we continue to like that name. We actually did see most material upwards estimates revisions with Netflix. This is an accelerating growth story. It remains that. This is going to be like the 7th year in a row in which the number of new paid subscribers they add is higher than it is in the prior year. So you're still relatively somewhat early on in terms of the growth cycle of that name. So we continue to like both of those names. So those theses are playing out. You've also got a price increase coming out with Netflix. They've been successful in the past. We think they'll be successful again. Those are nice new elements. Google, there's still this question about can they manage their expenses well. And Amazon has got a few interesting issues in terms of advertising revenue growth deceleration, although we don't think that'll sustain. We think that growth is going to be pretty robust. And then challenges in the India market. It's a small market, but that was a big hope for investors. So there's a couple of wrinkles here or there. All in, we think fundamental trends are pretty consistent, though.
Paul, let's get you on Snap here. You say, hey, the goose is cooked long term. Why is that?
Well, I've always been a bear on Snap, particularly with the advent of Instagram. It takes a lot of share, and they have such great resources to attack. I also don't think Snap is very well managed, and you can see that with the revolving door that they have over there in their executive management team. So the way I look at Snap, if you want to be in digital advertising, I think over time that the strong will get stronger. I think you have to be in Facebook and Google. Snap, I don't even know if they make it long term. Twitter, I give them some credibility, at least for the comeback that they staged in 2018.
Paul, do you feel differently about Match? I mean, it's not an advertising play so much as it is subscription. After earnings this morning, they're up about 9%. Some interesting moves that they've made in Tinder, which is their major focus in terms of growth. Maybe that's not one specifically that you look at, but in terms of how players like Google, like Facebook, like Amazon and Apple affect the ecosystem around them, do you expect subscription to play out differently from advertising?
I do expect it to play out differently, and I'd have to give them some cred for what they've done. I'd have to delve into the company in more detail, but like all of these platforms, are they going to be robust, and are they going to be robust for a long period of time? I don't know, but at least in the near to intermediate term, that one looks like it has some legs.
And on the advertising front, because these companies, they seem to be posting some pretty strong ad revenues. And in fact, we even saw this with Disney in their broadcast segment. They came out and posted very strong advertising revenues. Is there more drivers right now for some of these tech companies because of the amount of ad spending that's going on?
Well, one of the things that you'll have to note is as we go more international, which is inevitable, and as we go deeper into mobile and video, which is inevitable, you have a situation where it's less profitable for these companies to sell digital advertising in those venues. So one of the things that you're going to have to see, and I think it's going to take care of itself, is you're going to have to increase with a voracious appetite the number of impressions, because there's going to be constant pressure on pricing for the ads. But in the meantime, in that kind of scenario, the strong do get stronger, and that's why I feel so strongly about Google and Facebook and maybe Apple, or not Apple, but Amazon coming on rather than the other platforms like Snap and Twitter.